Yeah, so pretty much I think we've talked about since our last chat here. And yeah, state of the housing market. Let's take a look. I will let you do all the talking here, mortgage areas, and the rest of the ones that you sent me. I added one or two in the end so we can chat through it quickly.
Okay, sounds
Well,
good. I'll just talk about the first two charts, first of all. So the one you have up on the screen there, the number of
uh-huh.
mortgage arrears. So yeah, this is the actual number. There's also a percentage chart or percentage-based chart that talks about, I think it's at 0.22% right now or 0.23%. But yeah, of course, you look at where it was, the last dip on the right there, and that was
Uh-huh.
what, 2021 or 2022. And we've been increasing significantly. Now we're still at our last data is from December 2024, I believe. It is increasing. It's increasing sharply, and it has surpassed the number of mortgage arrears from the 2000, the low point there. So we've reached a certain level that I believe is important when you're surpassing, and even we're at the same level number of mortgage arrears pre-pandemic, just before 2020 there. So we're
I see.
back to normal levels, and we're above the previous lows. So it's headed up, and it's going to head up quick. If you look at between 2005 and 2010 there, look at how quick it shoots up, and look at how quick it shot up at the beginning of that chart there, which would be 1995. So yeah, we're definitely in the trend is your friend stage here. It's heading up, and it's going to head up quick, and there's no data out there, there's no news that's going to say otherwise, right? It's pretty safe to say it's not just going to reverse and head back down anytime soon. The next chart, which
Okay.
ties into this, so the chart previous was some national data from the 10 major banks. This is the Toronto Real Estate Board, and TREB means the Toronto Regional Real Estate Board. TREB used to
Okay.
be just the one R, and it was the Toronto Real Estate Board, but then the other areas around the region joined, so they put the second R for the region. This is I do keyword searches for the MLS bank sales and power of sales, and based on the names and whatnot, you can search them like this, and yeah, you can see how it's headed up since last year. So if we look at the most recent one, I just made this. You're the first one actually to see this chart here. I haven't even released
Okay.
this myself. And the week of March 23rd. So this is I do it like once a month, but I do the week off starting on a Sunday. So this was March 23rd, the week off. It's it's the highest it's been in a while now. This data is not data that you can just pull. I've been collecting this data because once the listings are gone, you cannot search by name. So you have to actively search these every month. And I started back in June last year. But if you go back to where mid in that chart there, December, so March 2024, right in the middle almost, 179 bank sales there on the
Uh-huh.
same data. And now we're what? Triple that. So we're seeing these year-over-year gains. So again, these bank sales are headed up. And again, you can listen to anybody in the media and whichever media you like to listen to, and they're headed up. So again, a sign of the times. And this is part of my home buying recipe that you have to watch the mortgage arrears and the bank sales, and when they're increasing.
Well, so if someone like about that Andrew, whatever his name is,
Mhm.
if he's looking at this kind of chart, then maybe you could say, right up here, as we're increasing in power of sales, and you look at the previous slide, right?
Mhm.
If this is coming up right here, the mortgage arrears,
Mhm.
maybe for real, maybe he's right. I'm just playing the devil's advocate here. Maybe there's going to be an opportunity to buy here, or maybe sometime soon.
Yeah, so it might be tough for him to incorporate this because this chart shows and the data shows that it's going to get worse. So it's like it wouldn't support his theory at all, this chart. I think he would say when things get really bad, it would be a great time to buy, but it's not an immediate urgency because they haven't reached the highs yet. And this probably is the most accurate indicator when those mortgage arrears reach their peak. And we don't know what that peak when it will be because it could go higher when we think we reached a peak. But they're going to go up to like they were in the last peak there after around 2010, right? This is, the Canada house price to income ratio, right? And this is from the price data from Korea Stats and the income data from Stats Can. And again, trying to get the Stats Can data is hard. There's no consistent data over the years where median income, average income before tax, after tax, like there is no data set where you can just grab it right from Stats Can. There's other people that do it, but it's And I think there's a reason for this, but they just don't want us to know. But of course, look at the red line at the bottom. There's your income since 2005. It's barely moved. Realistically, maybe it went from 60,000 to 90,000, but it hasn't moved. But when you look at the blue line, the house prices gone up. And these are in nominal terms, right? These are not adjusted for inflation. These are in nominal terms. So yeah, it's gone way up and your income hasn't moved. So look at how close your income was back then in 2005. And the average house price was what, over 300,000, maybe 320,000 or something. And on the right-hand side, you see the numbers 0, 2, 4, 6. So this is the price to household income ratio. Now, there is usually you're comparing the average house price to the average household income. So this is, I didn't have the average household income after tax. It was too hard to get. You can't get it in Canada back that far. You can get it for select years, but not every year. That's the gray broken line there. And I put in the middle, affordable, not affordable. So once it reached around 6 times, which would be equivalent to maybe 4.5 to 5 when average income, it was affordable before then. And I think most people could say that before 2012, most people wouldn't argue that it wasn't that hard to afford a home if you had a job. Like I sold homes to people with one income. That ratio needs to come down to, like, on this ratio that I'm using, like 5 times at the most would be nice, but even 6 would be okay. So that just, again, shows you that how far off we are, and it has a long way to come down. And how's that going to happen? Well, hopefully our wages go up. So we are way above. Like, I'm talking the minimum it needs to come to is like 6. It really needs to be between 4 and 5 on this chart.
So then the average house price, if it's going to be affordable right now in Canada, would put us right around 450,000.
Yeah, I just talked with somebody on my last meeting about this. So let's look at realistically, say it's $500,000. But anyway, it needs to come down significantly.
That will be a good day for Canada, really. Okay, so let's talk about this one. What do we see here?
This is actually a pretty scary chart. So this is the interest paid quarterly, and this is right from Statistics Canada. I did not create this chart here myself. Maybe I did take the data and create it, but this is right from Statistics Canada. And this is the mortgage interest, of course, times 1 million. This would be for all Canadians paid on mortgages. And you can see there, of course, before it jumped up on the right there, like 2021, almost to 2022, like prices were peaked there, but we weren't paying a lot of interest because interest rates were at ultra lows. This is why prices went up to offset this. But then when they started raising interest rates to rates that they should have been at, look what happened. So Canadians went from paying $50 billion,
Right.
I believe it works out to. And I believe this is its annual amount. So it's quarterly, but it's annual amount. So $50 billion a year in 2021 in interest to I think there's 104,000 from my memory. So to $104 billion. So from 50 billion to 104 billion from 2022 there, the start, to 2024. So in 2 years, Canadians.
That's 100%.
Yeah. So it went up 104% or whatever it is. It's over 100%.
Yeah.
And if you look at how consistent that data was for the last 17 years before then, it went up from 30 billion to 50 billion. So it didn't even double in 17 years. And in 2 years, it doubled. So like the debt load on Canadians is just astronomical right now.
And you know what's interesting here? Correct me if I'm wrong here. So this was the downturn in the economy in 2008, right? And I think it's a similar thing that happened here, that almost happened here. But we had a quick market correction here, and it went back to a steady phase. But here now, what we're seeing is way different now.
What's scary was from 2019 to 2021, or the beginning of 2022 there on that chart, prices were increasing significantly, but look at the interest is going down. And this is why prices were increasing. So people were actually paying less interest as prices were going up significantly. Forget about the deficit of 406,000 home deficit. And this is based off the population increase, right? Whether it's from immigration, it got cut off there at the end, the subtitle. It takes into account the population increase at 2.5 people per household. And this calculates, okay, they obviously didn't build enough homes for that, especially when you look at 2023, look at the deficit, and 2024, even 2022. Of course, 2021 and 2020, they had a surplus, the Liberals there, because we didn't have any immigration in 2020, and 2021 was very slow.